Welcome back. Wednesday here on Squawk Asia. Nice lead for Asian markets this day from Wall Street action overnight. The Dow picked up 54. The S&P added 11 and more. The Nasdaq about 21.5 points ahead there. Let's get right to Yu-Dee Chang, Principal and Chief Advisor at ACE Investment Strategists. He joins us live out of Washington, D.C. Yu-Dee, good to see you. Belated Happy Lunar New Year. How's the market look to you?
Market looks pretty good, actually. Not only the market itself, but also because of all these leveraged buyout, these merger and acquisition. It shows me of confidence in the economy, in the market, and also shows me vibrancy in the market as well. So overall speaking, Martin, I like the market. It looks good. However, I'm also a trader. I study patterns. I study behaviors. I think on the extreme short-term basis, I sense a little bit of danger. I think there might be a slight upside left. Then I'm actually expecting a correction in the market somewhere in the magnitude of about 4 to 6%, at which times, probably going to be in March already time frame, would be another good buying opportunity.
Okay, so you're trading it, but you don't fully trust it. Yu-Dee, what happens when rates go up? What happens to this run that we're seeing in markets? The Fed starts pulling back and some of the QE that has been pumping into the market. What happens then?
Yeah, you know what? That is the question, right? Because people were talking about the so-called melt up in the equity market with all the money coming out of the bond market going into the equity market. I think that may happen. Like for myself, take myself for instance, and our clients. Same thing. We know that yes, there's a possibility of rates going higher, but we're also in no hurry though. The yield is still pretty bad all the way around, except maybe in the equity market. So we're saying, yeah, we might want to take rest of the year to start little by little getting out of the bond market. So I don't necessarily think there's going to be a melt up in the market. I think it's going to be a gradual process throughout the years, thus bump and bruises eventually having an upward bias in the equity market. But definitely we're going to see corrections along the way.
All right, big stories this week have focused on M&A over in your corner. Is that going to be the catalyst? Are you expecting more of that, Yu-Dee? And will that be the win that takes the market higher?
I think so. I'm definitely expecting more and more you could see. You know, the CEOs are getting more confidence about the economy and about the market. And relatively speaking, a lot of them still want to take advantage of this lower valuation at this stage, especially looking forward, right? So this is a good time to do these buyouts, to do these merger and acquisitions, especially if one expects much rosier pictures down the road for the world economy and their company's outlook for the matter. So personally, I do expect there will be more mergers, acquisitions, and buyouts in this market, which, like you said, I think definitely would be a tailwind for the market, helping to push this market higher.
And if we don't see any M&A activity at Yu-Dee, are we going to see more buybacks instead?
Yeah, buyback is very possible too. A perfect example is the Dell computer, right? So yeah, like I said, at this level, if you have a rosy projection going forward, then this is actually a good price level. So start buying some of your own stock back, especially if the market had not already discounted most of the rosiness in your stock price, which I don't think they have. So no doubt, if it's not merger acquisition, then I think we'll be seeing a lot more buybacks of this company stock, which again, will continue to push this market higher.
Okay, we'll delve into Dell in just a couple of minutes. Stay right there. Yu-Dee Chang of ACE Investment Strategists joining us. If you have any questions for Yu-Dee, send us an email. The address is squawk@cnbcasia.com. We're also on Twitter. My handle @LisaCNBC, and Shree's handle is @CNBC Shree. We'll be right back. Good morning. Welcome back to Squawk. Some earnings news to tell you about this morning. Dell shares are moving higher in extended trade after the world's third biggest PC maker reported an 11% fall in revenue. Also under scrutiny now is the company founder Michael Dell's offer to take Dell private in the biggest leverage buyout since the financial crisis at $24 billion. Peter Missick is Managing Director and Senior Tech Analyst at Jefferies. He is joining us now on the line from my old stomping grounds of Toronto. And still with us is Yu-Dee Chang of ACE Investment Strategists in Washington, D.C. Peter, $13.65 a share. That's the offer on the table right now. Is that going to be enough to get this deal done?
No, we don't think so. We think they're going to have to raise the bid, especially in light of these results. Those top-line results were good. And while the margins in the EPS were helped by vendor settlements, we think the overall results are indicative of a company that's starting to move through their turnaround. So we think they're going to have to raise.
Okay, how much?
Our best guess is up to $15. We would argue that at $15, the current shareholders get to reap some of the benefits of this turnaround, and Silver Lake and the Take Private Consortium have some reasonable returns. So we would expect an IRR somewhere in the neighborhood of 20 to 25% for them, which is a very, very good rate.
Okay, Yu-Dee, jump in here. We've got Peter saying that price tag $13.65 is not enough. What do you think?
Well, I think he might be right. Right now, if you think about it, Dell and insider Michael Dell, that is, owns about, what, 16% of the company, where the opposition owns about 15%. So you need about 42% of the remaining shareholders to okay the deal in order for it to go through. So I actually agree with Peters, somehow raising the bid a little bit. Technically, if you look at it, stock breakdown price was at 15. Maybe 15 is a nice price to offer out there to get a deal done.
What happens to the stock if this deal doesn't go through, Peter?
If it doesn't go through, we think there'll be a bit of a whoosh in the stock price. So there is some risk to the downside here. But we would expect the company to do a leverage recap, and that leverage recap would entail them going into a net debt position and issuing either a special dividend or buying back a significant chunk of shares. That's probably what the board would be forced to consider were the deal to fall through.
Okay, Yu-Dee, we were talking about M&A possibly being a wind in the sails of this market and helping to move things higher. How do you identify sectors and companies that might be attractive takeover targets?
Yeah, that's a great question. And actually, people devote all their life to work on this, trying to find the opportunity. It's not that simple, actually, if you think about it. You have to go into the right sector. You have to go find a company that theoretically is slightly undervalued. You want to look for companies with a lot of cash position. I think that's a very, very big plus, because that makes them to be good takeover candidates as well. So with all that, still, like Peter is saying, that sometimes it's not easy to get a deal done. So when, this thing is not really exact. It's not that easy to really correctly identify it. And sometimes you sort of have to go with a rumor and go with a story and speculate a little bit once the so-called news is out a little bit. So it's not something I think where analysts could really sit there and devote the job to be analyzing, saying, well, what's the next possible candidate? I think it's more of you kind of go with a flow type of deal to me.
And Peter, are you expecting more M&A in the technology space in 2013? And how do you think investors should approach the sector overall?
The tech sector is always ripe for M&A, simply because technology is really disruptive and by nature requires new innovation, and therefore a lot of these big companies can't innovate internally, have to go out and buy it. So we would expect that to continue, but you're probably referring to larger buyouts. And on that front, it is really difficult to figure out who's next. The larger the percentage of cash on the balance sheet, we would say would make the most attractive. And we would think a lot of the private equity players are really looking at the staid-old companies to see if they can unearth value. The problem is size. So the biggest one that would be on the radar screens would be an Apple or a Microsoft, but they're too big. Dell is about the upper limit of take privates or leverage recaps that we could see. So we think you got to look at Dell and under with large cash balances for potential M&A going forward.
Yeah, guys, let's get away from this deal and talk about the actual business. I mean, on the earnings, both revenues, also EPS, beat by just a little bit. So I guess that's positive. But when you break it down, PC revenues down 20%, consumer revenues down 24%. The only bright spot that I can see is networking up 42%. What's going on there, Peter, real quickly?
Well, networking is getting a benefit from these huge data center build-outs, and so is their server business. The strength for Dell is the mid-market, so we're not surprised by the consumer.
Okay, listen, guys, we got to go. Peter Misek from Jefferies, and we're back with more with Yu-Dee Chang from Ace Investments, taking your questions when Squawk comes back after this.